Ms. Legalista here. Thank you for joining the video. And I'm back to talk about Fifth Third Bank. I did a live on some of the frauds and scams that they were talking about on their website. And it looks like they were running the biggest scam themselves. They have now been hit with an action against some of the practices that they had at the bank. And it just is a reminder about when you're an employer and you put practices in place that are primarily there to make your employees hit targets, that sometimes it's just not a good thing. You're not doing it right. Wells Fargo ran into the very same issue. And so, even though I'm talking about banks, it's not entirely just in the banking industry. It's everywhere. It's everywhere. They'll tell you to hit these sales goals, and sometimes people will do whatever they can to do that. So, Wells Fargo ran into this sort of action too. But let me bring this up so that you can see why this bank, Fifth Third, is not going to be doing some of its sales quota, practices that they had in place. It says here we have the Consumer Financial Protection Bureau takes action against Fifth Third for wrongfully triggering auto repossessions and opening fake bank accounts. Fake bank accounts. That's the same thing that Wells Fargo got in trouble for. Opening fake bank accounts where consumers didn't even know that they had these accounts in their names. It says bank will pay consumer redress and is banned from using sales quotas that spawn fraud. And there they have on their website. I go back and look at my live. I go through that whole thing. I even broke out some videos, just some short pieces talking about things that were on their website, which I felt like they could have done a better job of discussing. And here it is. They are the ones that are now accused of spawning fraud themselves. Are they going to put that on their website? Hey, look out for those banks that are opening fake accounts in your name. I bet you they don't have that on their website. I can tell you they don't, because I was just up there yesterday and I did not see it. So, how do you talk about yourself when you're the one who's accused of this kind of action? Well, let's see exactly what was going on. And I realized that the print might be kind of small for you. I try to make it bigger. It just, I'm like, hey, let's make it as big as we can here. Let's see, but it kept doing, oh, there we go. Look at that. You probably don't want to read all of that anyway, but at least now it's big. Okay, so this is from July. So this has been a couple of months. It says, the Consumer Financial Protection Bureau today took action against repeat offender. If you go back and look, you can look up the amount of penalties that some of these banks have had to pay, some of these financial institutions, and you go, oh, well, it's in the millions of dollars. But that's okay, because, they make that in quarter one, make more than that. Make the penalties for one, I want to say the penalty was like 1/10 of the profits that they made in a quarter for one of the ones that I was looking at, if I remember correctly. And sometimes my memory isn't that great, but I think that's what it was. Okay, against repeat offender Fifth Third Bank for a range of illegal activities that would result in the bank paying $20 million in penalties, in addition to paying redress to approximately 35,000 harmed consumers, including about 1,000 who had their cars repossessed. Okay, let's break that down. They are a repeat offender. They engaged in a bunch of illegal activities. They had to pay $20 million in penalties. They harmed 35,000 consumers. 1,000 people, just imagine, walked out of their homes to get ready to go to work, take the kids to school, go to the doctor's office, hang out at the gym, run to the grocery store, and guess what? The car was gone. The car was gone. Specifically, the CFPB is ordering Fifth Third Bank to pay $5 million penalty for forcing vehicle insurance onto borrowers who had coverage. You already got coverage. Well, you have to purchase this through us. That kind of stuff, like that kind of stuff. This is why people get upset about the financial institutions, and they see the money that they're making and how much they're paying you back in terms of your interest, and then the kind of stuff that they're doing here to make sure that the bank is, hey, rolling over in dough, and probably the people at the top getting paid for hitting some of these sales goals. All right, so you see that part. The CFPB also filed a proposed court order that would require Fifth Third Bank to pay 15 million, so that's the 15 and the 5 for the 20, for opening fake accounts in the names of its customers. The proposed court order bans Fifth Third Bank from setting employee sales goals that incentivize fraudulently opening accounts. Now, I really would like to see the original filing with the allegations. That's what I'd really like to see. This sort of, hey, if you hit this sales goal, then we will give you this bonus. It sounds like that is what was in play here. And a lot of companies do this. This is not anything that you only see in the banking or financial industry. Lots of companies do this. It's a way of saying, hey, here's your base pay. And as a bonus or commission, if you hit these sales goals, then you get this amount. And so employees will work harder. They will come up with different ways to make sure that they're hitting those sales goals. And in many instances, it is perfectly fine. It is perfectly fine. That means everybody has some skin in the game, right? Everybody has skin in the game. You won't have those employees that are coming in and just, lounging and not doing anything because they are now incentivized to hit these sales goals. Well, they can no longer do this. The proposed order is banning them. Okay. And this is July. So this may be signed by now. I need to pull that up and see too. It says the CFPB has caught Fifth Third Bank illegally loading up auto loan bills with excessive charges, with almost 1,000 families losing their cars to repossession. We are ordering the senior executives and board of directors at Fifth Third to clean up these broken business practices or else face further consequences. Look at that. Okay, so let's look at this number here. It's a large bank holding company with 214 billion in assets. Operates approximately 1,300 branches in 12 states, primarily in the Midwest and Southeast, offering financial services, including credit cards, mortgages, home equity lines of credit, and auto loans. Today's order, the first of the actions, addresses the findings that Fifth Third Bank illegally triggered repossessions. Can you imagine just being pissed off about that? And charged illegal fees by forcing loan borrowers into unnecessary and duplicative coverage policies, meaning they already got coverage, but you're telling them they now have to get it from you. Look at how far back this was. 9 years. 9 years they did this. Between July 2011 and December 2020, more than 50% of the policies were charged to consumers who had either always maintained their own coverage or obtained the requisite coverage within a 30-day time frame of their prior policy lapsing. Specifically, Fifth Third Bank's conduct harmed borrowers by, look, okay, there we go. We have these unnecessary fees. It says, in more than 37,000 instances, Fifth Third Bank illegally charged fees that provided no value at all. None. None, none, none. In some cases, the policy was duplicative of coverage they already had. And then we saw this other part. It said the borrowers paid over 12.7 million in illegal worthless fees. While consumers received coverage with no value, Fifth Third Bank profited. When the unnecessary and duplicative coverage was canceled, borrowers were entitled to a refund of the illegally charged fees. But instead of refunding the money directly to borrowers, Fifth Third Bank applied the refunds to consumers' outstanding loan balances. So here's something to think about. I think a lot of people don't realize this sort of collateralization and some of these provisions that are in these agreements when you're signing them. And sometimes you're signing something that lets the bank do this sort of stuff. Other times, maybe not. Here, they took that money and instead of giving it to them, said, oh, well, we'll apply it to this loan balance you have over here on the vehicle. Fifth Third also reinsured its coverage program and made millions by getting paid fees that far exceeded any claim losses under the program. Like, I'm always amazed at the people who will sit in a room and come up with these kind of practices that they know harm other people, that they know, like anything to make a buck. Like, this is your neighbor coming in, but for some of these people, it's not their neighbors because they live in where they live, the people who are having to go through this, you know, probably not. They don't care. They don't care. They are sitting in these rooms coming up with these kind of policies that harm other people. I, yeah, yeah. Punishing borrowers with repossessions. Fifth Third Bank demanded borrowers pay for coverage they did not need or else face delinquency, additional fees, and repossessions. Fifth Third Bank conducted repossessions of vehicles when the delinquency was caused by the bank charging unnecessary and duplicative coverage. Yeah. The second of the two actions announced today resolves this lawsuit. All right. And they were using a cross sale strategy to increase the number of products and services it provided to existing customers. Look, this is like the French fry upsell, right? The French fry upsell. You go in and you're just like, I just want a burger. I just want a Chick-fil-A. And they're like, you want fries with that? I mean, you want to get the meal. It comes with, you want to go ahead and get the drink. What do you drink? Think about it. Sometimes you go up to the drive-through and you say, "Hey, I'd like a Chick-fil-A sandwich," and they say, "Oh, okay. What kind of drink do you want with that?" And you go, "Oh, okay." You tell them the drink. So then what you get back is either the whole meal with the sandwich, the fries, and the drink because you said you wanted the drink, or they give you the largest drink, like anything to upsell and to get you to pay more. And so, yeah, you say burger, they say, do you want fries with that? You say a sandwich, chicken sandwich, do you want fries with that? And then what kind? And then not do you want a drink? What kind of drink do you want? Okay, understand the difference in terms of the question that you get asked. Because if you are asked, do you want a drink? You might say no. But if you're asked what size of a drink, what size do you want your drink to be? What size drink would you like, ma'am? And you go, oh, just give me a medium. And you may not want it to even get that drink, but now you've been processed. They are controlling the thinking that's going on here in terms of the purchase. This is the sort of stuff that goes on. So here is just another form of cross-selling, upselling, putting sales quotas and strategies out there for employees to meet. But some of this really and truly crossed the line. Okay. Some of this crossed the line. It says, so here's what they have to do. They have to make harmed consumers whole. They have to pay redress to about 35,000 harmed consumers. That's good. Pay them back. I think they should pay them back with penalties and interest, just like they would do if you did something to them. Ban sales goals that led to fake accounts. This is the proposed order would prohibit the bank from setting sales goals for its employees that incentivize the opening of unauthorized accounts. I wonder if that will actually stop them. Pay 20 million in fines. Fifth Third Bank must also pay 5 million penalty, a 5 million penalty for its illegal activity. And if the court enters the proposed order, a 15 million penalty for opening unauthorized accounts. Both penalties will be deposited to the CFBP's Victims Relief Fund. Okay. And then there's some more down here. And this is what we mean when they say they are a repeat offender. It says in 2015, the CFBP took two actions against the bank. One for discriminatory auto loan pricing, which was, look, a joint action with the U.S. Department of Justice. And the other was for illegal credit card practices. For the discriminatory auto loan pricing action, Fifth Third Bank was ordered to pay $18 million to harmed Black and Hispanic borrowers. For the illegal credit card practices, the bank was ordered to pay $3 million to harmed consumers and a $500,000 penalty. So this is what we're talking about here. This sort of stuff right here. And like I said in a previous video, I'm on their website. I'm on the Fifth Third website talking about scams and frauds where they are trying to educate people. And here they are putting practices in their company, in their business, in their structure with their employees that causes employees to open these fake bank accounts. I'm not saying they made them do it, but here's what happened. You read the title there for yourself. All right. So I hope this enlightens you, because here's the thing to think about when you're out there purchasing your auto loan and your credit card. Like, first of all, get a copy of your credit report and see what's going on. See what's out there. What kind of credit card accounts are out there that you might not even know about. Second of all, stay on top of your bank accounts. Now, it used to be, yes, stay on top of your credit report to see what accounts might be open, credit card accounts, things of that nature, what they're reporting. Now, you got to go look at your bank and pull up the statement and make sure though that checking and savings, money market, whatever you thought you had, that's the only thing you have. So now you got to make sure that you're looking out to see whether or not your bank or your credit union, your financial institution that you use is opening fake accounts in your name. Like I said, can't keep up. I can't keep up. It's not about it's not about if you will experience a scam or fraud. It's about when. So protect yourself, keep your eyes and ears open. Hope this enlightens you and provides you with some information so that you can keep your money safe for you and your family. Don't forget to give the video a thumbs up. Mwah. Peace. And don't forget to subscribe.